Welcome to the Businesstalk podcast. I'm Deepak, joining you from India and delighted to host today's episode. It's a true pleasure to have Dr. Isabelle Solal joins us as our distinguished guest on today's episode. Before we begin, allow me to introduce our guest for today's episode. Dr. Isabelle Solal is an assistant professor in the management department at ESSEC Business School, where she brings a rigorous and multidisciplinary lens to the study of inequality in labor and financial markets. Her teaching spans entrepreneurship and organizational behavior, reflecting the breadth of her scholarly and professional background. Her research sits at a compelling intersection of gender, organizations, and economic outcomes. She investigates how audiences interpret ambiguous signals through the lens of gender, how gender perceptions shape both actual and perceived career preferences, and how well-intentioned diversity initiatives can produce unintended consequences for workplace equity. A parallel stream of her work examines worker well-being with a particular focus on mental health. To explore these questions, she employs archival data analysis and laboratory experiments, drawing on rich empirical context, including high-growth entrepreneurship, top-level management, and scientific teams. Before transitioning to academia, Professor Isabelle built a distinguished career as an attorney specializing in investment disputes and sports law, and as a management consultant, experience that lends her experience a rare practice-informed perspective. She earned her PhD in management and MBA from INSEAD. Her legal training spans three prestigious institutions: King's College London, Université de Paris, and the College of Europe. Today, Professor Isabelle joins us to discuss her research. Does investor gender matter for the success of female entrepreneurs? Gender homophily and the stigma of incompetence in entrepreneurial finance. Let's not keep you waiting. Please join me in welcoming Dr. Isabelle Solal to the podcast. Professor Isabelle, we deeply appreciate your gracious acceptance of our invitation. It's an honor and privilege to host you today.
Thank you so much, Deepak. I'm really glad to be here and happy to have a chat about my research.
Thank you, Professor. Professor, the venture capital world is often celebrated for meritocracy, making the best ideas regardless of whom pitches them. But your research tells a very different story. What first made you suspect that the source of funding, not just the amount, could shape a female entrepreneur's future success?
So first of all, I think we have to address the fact that this idea that venture capital is a meritocracy is a myth, right? For a couple of reasons, right? First of all, because venture capital, like any other decision-making process, is run by humans. Humans have cognitive biases that influence their judgment, and that make it harder to be purely meritocratic, right? So we know that gender in particular influences venture capital. Second of all, these are decisions that are made under conditions of extreme uncertainty, right? VC investors have very little information to go on when they are making these investment decisions. So what they're looking for are patterns that they recognize, right? Signals that they can rely on. And these signals, we know, and it's not surprising, we know that they include, the reputation or experience of prior funders, right? So they do look at who is supporting this venture, who has already invested in this venture. And I guess, the question that we asked is like, well, if reputation matters, why wouldn't the gender of the investor matter as well? And that was an important question because of, this argument that if only there were more female investors, we could get more funding for female entrepreneurs.
Professor, women should invest in women has become almost a rallying cry in startup ecosystems. Your findings suggest this well-meaning advice might actually backfire. Can you walk us through the mechanism? Why does female-to-female investment trigger a competence discount in the eyes of future investors?
Sure. So the argument that we make in the paper is that this is based on biased attributions, right? So essentially, when humans try to make sense of what happens in the world, they try to infer what might be the causal relationship, right? If I am seeing this, why am I seeing it? but they do that in a way that matches with their pre-existing beliefs. So if the pre-existing belief is that female entrepreneurs are not as competent as male entrepreneurs, and then they see something that doesn't match with that belief, right? They see this female founder getting funding, they're going to look for an alternative explanation, right? That isn't about competence, right? So that they don't end up in this cognitive dissonance situation, right? And so the argument that we're making is that when the backer is herself a woman, that gives observers this kind of, thing that they can grab onto as, oh, that must be why she received this funding not because of her competence and skill.
Professor, your field data show that female-founded firms backed by female VCs are 2 times less likely to raise additional financing. That's a striking number. How did you isolate investor gender as the driving variable? And what did the data on male-founded firms reveal by comparison?
Sure. So what we did, first of all, is that we broke down our data into different investor and founder gender combinations, right? And so we were comparing female founders who had a female investor with the three other possible combinations, right? So female founders with a male investor, male founders with a female investor, male founders with a male investor, right? So we had our four different combinations to try to compare outcomes across them. In terms of isolating the investor effect, we have a host of different controls. I think it's also important to note that we were looking only at firms who had already raised a first round, right? Because it's important to make sure that what we're capturing is, in fact, a failure to raise, right? And not a decision not to raise, okay? But we know that firms who have raised a first round will all go out to try to raise a second round. So what we were seeing was really kind of investor decisions, right? We also ran the analysis on different samples, including one where we matched the firm characteristics as closely as possible so that we could, account for any differences in the types of firms that men and women are founding, right? But basically, what we see if we look at our four combinations is that it's the female-female combination that is different from the other three. So that's important why. So first of all, it's important for us to see that it's not a female founder effect, okay? When the female founder gets her money from a male investor, she is doing fine, right? But it's also important for us to see that it's not a female investor effect, right? So for male founders, it really doesn't matter who they are getting their first round of funding from, okay? They do just as well raising that subsequent round, whether they have a male investor or a female investor. So it's really the combination of the two that is giving rise to this problem. And that's what leads us to argue that people are making these attributions when they see the gender homophilous relationship.
Professor also ran a control lab experiment to test these dynamics. What did participants actually see and evaluate? And what did their response reveal about how deeply rooted competence-based stereotypes are when it comes to female entrepreneurs?
Sure. So first of all, we ran our experiment with MBA students, right? Because we wanted to have people who, have some familiarity with finance, with investing, with entrepreneurship, and who were able to assess pitches, competently. Um, and what each of our participants saw was one video pitch. Okay. Um, it was a voiceover, so they were seeing slides, okay, that were identical across conditions. What varied was the gender of the founder. So we had a male and a female voice, right, narrating the pitch. And then at the end, there was a slide that said, we have already raised, this amount from, and then we varied the gender of the investor that they had raised the money from. But otherwise, the pitches were identical. and they related to a sort of career networking platform. Right? We didn't want to have something that was perhaps, too masculine typed, right? Because that could have given us a confounding effect. Um, so that really allows us to isolate, what is happening, is it really that combination that is driving the effect, right? Since everything else is controlled for. And so that is what we saw. And what we had the participants rate was, first of all, the perceived competence of the founder, the perceived competence of the investor as well, and there was no effect there. And then their willingness to invest, or how attractive they found the pitch. And so we really saw this mediated effect. It was because they thought that in that combination, the female founder was less competent, that they found the pitch less convincing and less attractive as an investment opportunity. In terms of what it tells us about how deeply ingrained these biases are, there's a lot of work in psychology, that shows that this is really a question of automatic cognition. Again, our MBA students that participated in this study, we had men and women. These are all people who would claim that they have absolutely no biases, and a lot of these women were interested in entrepreneurship themselves, but they are unfortunately automatic cognitive processes that are hard to avoid.
Professor, your research identifies perceived competence, not likability, not risk appetite, is the key mediating factor. Why is competence perception so central to early stage investment decisions, especially when a venture has a very little track record to speak of?
Yeah, I think that's a really good question. So I've had a lot of conversations with investors, to try to understand what it is exactly that they are looking for when they're investing, and what they'll tell you is that when, as you said, they have very little information about the venture itself. So they're looking for a founder or a founding team that looks like they're going to be, able to pivot to a new idea, able to implement an effective strategy, able to attract resources, to attract partners, to hire a good team. So they're really looking for that skill set in the founder. And so they make a lot of inferences, not just from gender. Gender is a small part of it. It's what we focus on here. But, as we know, the school that you come from has a big effect as well when VCs are trying to predict whether you will be a competent founder.
Professor, beyond the female entrepreneur, your paper highlights an undue burden placed on female investors. In your view, what does it mean to ask women to solve a structural problem that they didn't create? And what cost does that carry for them professionally?
Yeah, so this is something that I'm, really fervently advocating on. We have to stop expecting women to solve these problems, right? For a couple of reasons. First of all, there's research out there that shows that women who advocate for other women, who pursue diversity initiatives in their leadership roles are perceived as less competent leaders, right? So there's an evaluation penalty, which does not apply to male leaders who pursue diversity initiatives, right? Interestingly. Um, and at the same time, it also takes time away from what would otherwise be promotable tasks that they could engage in, right? When we're asking women to mentor women, when we're asking, like this is an example, for example, from academia, whereas there was a discussion about there should always be a woman on dissertation committees, there should always be a woman, on hiring committees. But when you have fewer women, you're making them work a lot harder than men, and they're not getting promoted for that, right? These are important tasks to do, but these are not tasks that you get promoted for. So you're actually really hindering women's careers by putting all of the burden on women. And by the way, this is exactly the same for underrepresented minorities, right? It's not just a gender problem.
Professor, encouraging women to fund women is not the answer, or at least not sufficient. What systemic or organizational interventions do you think could more effectively close the gender gap in entrepreneurial finance without inadvertently penalizing the very people they aim to help?
Yes. So that is the billion-dollar question, right? And I wish I had the answer. One of the things that our research suggests is that, this was a small part of the sample, but it looked like when there were investment teams, mixed gender investment teams, so when both male and female VCs were investing in the female venture, that penalty went away. Okay. So more mixed gender investment, more mixed gender work. I think can be something that we can look into. More fundamentally, I also think we have to address the pipeline problem. Let's not forget that a lot of VC investors or angel investors, come from the tech world, come from entrepreneurship. So if we don't have enough women in those roles, they're not going to feed into the investor pipeline. They're not going to feed into the entrepreneurship pipeline. So we kind of have to go down the chain. That also includes, looking at higher education institutions. How can we, make sure that more women are, involved in STEM, or even like when I teach entrepreneurship in business school, I have fewer women signing up to the entrepreneurship electives than men, right? Um, so it's really like it's a peel the onion problem, right? The fix is it's got to be at the root, which is really encouraging women and girls to not limit themselves, basically.
Professor, findings apply specifically to venture capital and high growth entrepreneurship. Do you believe the same homophily driven competence penalty plays out in other domains, say in corporate promotions, academic hiring, or creative industries, where women are similarly underrepresented?
Yeah, so I mean, I think we could see the same effects anywhere where, first of all, women are not stereotypically expected to perform as well, right? And second of all, where sponsorship or support plays an important role, right? So, if we think about women being assigned to kind of high visibility teams or work assignments, if they are being selected by, female partners, let's say in a consulting firm, it could be that when it comes time to promotion, that work is discounted as being like, oh, there's that female partner, trying to help women out again, right? As opposed to, okay, well, this junior woman is clearly qualified. Same thing with, maybe dissertation advisors for PhD students, um, but more research would need to be done, but I would not be surprised if we would see something similar.
Professor, social capital research has long argued that homophily connecting with similar others is a resource. Your paper complicates that narrative. Is it fair to say that homophily works differently for women than men? And if so, what does that tell us about how inequality gets reproduced even through supportive networks?
Sure. So first of all, we're not the first ones to show that homophily works differently for men and women, right? Um, Now, that being said, in the prior literature, what we saw was that women were getting fewer resources from same-sex network ties, right? So, and it's kind of logical when you think about it, right? If women are less central in an organization, then the women that they have relationships with are not going to be able to access valuable resources through them, right? So it's about resource flow. So other scholars had already looked at that, and the suggestion from there was that women should really be building relationships with men, because that is, where they can access sort of instrumental, resource-driven support, where women's ties with women are valuable, are more on, emotional support, which is very important, right? Women also need those role models and those relationships to feel like they belong in the environment. What's different with our paper is that we show that the homophilous ties doesn't just affect the resources that flow, right, from one person to another, but it actually affects how other people perceive you. And that is kind of, what is different. So if we are encouraging women to build, these same-sex networks, which we have done over the last couple decades, within organizations, there's a lot of, women's network and, either organizational or occupational, we have to be really mindful of the consequences that can have.
Professor, I would like to conclude this episode with one last question. If you could change one widely held beliefs among policymakers, startup ecosystems, or corporate diversity officers, based on what you found in this research, what would it be and what evidence-based alternative would you put in its place?
Sure. So this actually goes back to an earlier question that you asked me that we talked about, which is this idea of thinking that diversity or gender gaps are a woman problem. That is something we have got to get past, right? First of all, it's a resource allocation problem. It's a talent allocation problem. It is not a woman problem, okay? The fact that we are not hiring the best people, promoting the best people, and encouraging the talent and creativity of our entire employee pool is an everybody problem. And so because of that, it needs to be addressed by everyone. Women or underrepresented minorities not only should not be responsible for it, but they're also not the only ones who are legitimate in working on this issue. And I do think we're seeing now some work suggesting that diversity issues are best addressed by men and women working together, or underrepresented minorities working with majority members, so that it can be a sort of a holistic approach to the problem, so that we don't have the unintended consequences that we were talking about for the women or underrepresented minorities who are taking on these roles. Like if you look at who is a chief diversity officer in organizations, these are not white men. Okay. There are reasons for that. I'm not saying, we should make them all white men, but I am saying, okay, let's make sure everybody is involved and people are working together. Now, obviously, when we talk about, DEI, or even the role of chief diversity officers today, this would be a whole other conversation. We know what is going on in the world right now and the pushback, that we're seeing. But again, like I do think that if we address these questions more holistically, if we understand this more as a, capturing talent and allocating resources, we can also maybe move past some of this backlash as well.
Listeners, as we wrap up today's episode, I want to convey my sincere gratitude to Professor Isabelle Solal for walking us through research that is as thought-provoking as it is timely. The question of who funds whom and what signals that sends to the broader market is one that every stakeholder in the entrepreneurial ecosystem must sit with. At Businesstalk, our mission has always been to bring the best of global research to our audience, and today's conversation has done exactly that. Thank you, Professor Solal, for being with us, and we look forward to welcome you back for our next episode with fresh perspectives. Thank you once again.
Thank you. I really appreciate it.